Hi, you join us at the Alpha Capital Casino Royale event, and I've just been approached on the floor by
Katie.
Katie, who's been into trading for how long?
Around 2 years I've been trading macros, but overall probably like 3 to 4 years.
3 to 4 years,
Yeah,
okay.
within the market.
So within that, what products are you trading?
Mainly FX at the moment.
Okay. So what made you think I need a bit of fundamentals in my life?
Just because I feel like the fundamentals are really what drives the market.
Yeah.
I was always a technical trader before, and I'm always the type of person that asks why. Like why.
So you're an inquisitive person.
Yeah, so like why the movement was happening, and I couldn't get my head around getting stopped out and then not knowing why that was happening.
And that's so frustrating, isn't it? And
Yeah.
And I've talked about this a lot with people. You've done all the work. The technical's perfect. You've got if someone, say ICT looked at it or whatever, I don't know what you use, but they looked at it and they go, yeah, perfect setup, and it's a loser. And
Yeah.
not enough people talk about that. It's like technicals isn't a guarantee. It's just one facet to the picture. So my philosophy, as I said on the day, is I think all technicals are in the picture. It's just which one is most predominant. So you're not necessarily wrong, and it's identifying what is driving this current technical picture.
Yeah.
Which my position has been, and more people in this world are coming around to it now, is it is a combination. So you need to be on those fundamentals, and it can work both ways. Technicals can drive the fundamentals. Fundamentals can drive the technical. It's knowing which one is right, but without understanding what's going on and what the big picture is, I think it's difficult to know. So what's your view on that?
So I was talking to Joe earlier about risk
Yeah.
and then obviously macro and how they both intertwine. So we were talking about the French elections actually, and
What have you been? How did you? That'd be interesting. How did you frame that then as an event?
So originally I didn't realise how much impact it would have had on the market. But I think looking at the bonds, for example, the EU02.
Yeah. Or the oat minus the buns.
Yeah.
Is like the big one.
By looking at them, it pretty much tells you all you need to know about what the market thinks.
So if you're on my chat and get my preview, we were talking about that, and I think it's the worst since 2012, the spread between them. Mm-hmm. So, I mean, Macron is an interesting character. I mean, I've always found him a bit Marmite, as people say. I talk about Jean-Luc, the law of unintended consequences, and that guy plays that card all the time. Didn't think that through in any way. Just arrogant. So politics, which normally is a bore-off event, suddenly is a market-moving event because. Well, you tell me, what did Joe say, or what did you find out about that?
Just about how the market really doesn't like uncertainty. So if we compare it to the pound, for example, where pretty much the market kind of knew that the Labour Party were going to win. So actually, I was quite intrigued to see how the market would react to the pound on the 4th. So I didn't participate in the market on that day.
You're probably quite right. I mean, I'd say
out of caution, really.
It was all in the price, and to be honest, it's about the margin of victory. And if anything, that was more sterling positive. What you'll find if you look into the politics of markets is that, again, uncertainty or too much certainty, too much control is dangerous as well. So they're just in between. So that's probably good for nothing really calamitous happening.
Yeah. I was also speaking to Joe about how I think when the French elections first started, the uncertainty of that was quite high. But now what I'm finding is actually the hung parliament is pretty much baked into price.
So they've manufactured that.
And that's why we're seeing the increase
so people are
back in the euro at the moment.
Yeah, so they've done a particular deal where they've pulled out a number of seats for the left versus the centre, which means that Le Pen probably can't get the full majority. So you'll have a hung parliament, and that all that means is nothing bad will happen again. And pretty much like America, like they keep doing the funding problems. Can they roll that over? So these things repeat around the world. Of actually, it's not such a bad thing if it's a tug of war.
Yeah.
So,
what do you think about the way that the market's trading at the moment off risk, and then how, from what I've identified anyway, the risk has always been at the forefront of markets. Like investors want to.
So you mean risk on, risk off?
Yeah. So like investors want to protect their capital, but at the same time, we're seeing the French elections haven't finished, but then the market is trading more off macro this last week, especially with NFP.
And politics, even the whole Joe Biden thing, as just as the data was coming soft in the States, which from macro, and what Joe was saying, is that interest rate sensitive? Yes, it is. It means that rates are likely to go down. The whole Trump thing, that's dangerous, so people panicked, and that pushed up the yields. And yet you look at data, if you're only looking at data or looking at the chart, you're going, what is going on there?
Yeah.
But it's the fact that that is a risk situation. So that could unwind if Biden pulls out of the race. But it's the dangers of Trump is going to be inflationary, which means you get a strong dollar, higher rates for longer. And that's how it comes through. And yet you automatically look at it and go, why would the dollar be strong with an idiot like Trump being involved,
Yeah.
So it's just understanding what their policies are underneath.
Yeah.
So again, the one thing to have looked at in the last few weeks is futures data and commodity data and that sort of stuff. So for June, there was an outflow in every single future, which is, you think, is what's going on, risk off. But their hedges have gone to Hamptons. The hedges are in Hampton. And that's the sort of phrase being used on Bloomberg and all that sort of stuff. They totally de-risked. They looked at the picture and went, don't like this. And that has affected. So there's not as much liquidity in all instruments as you expect. So you'll notice there's not that much volatility in a lot of the currencies if you're looking at those.
Definitely, yeah.
Gold got hit because China supposedly weren't buying, but that's just on the official side. And there are things going on in that world that you need to know from a macro perspective that you'd never get from the charts, i.e. central banks are buying it, but they're buying it for a reason.
And how do you see the dollar playing out for the rest of the year going into 2025?
Well, I've been talking about it for ages. That we're in a C leg. I look at waves, and we're in the third final big C leg, which should take it below 100. And we keep playing out ones and twos, a sell off one or two, a one or two. They call it nesting. And it just becomes ultimately frustrating because that's extended a few times. But we've broken the downtrend. We're getting lower lows for the move. The data is weakening. You'd like to think we're in that sweet spot now, and seasonality is there. That's potentially, I think. But it's really good that you're interested in all this.
Yeah.
How are you going to take it further? What are you going to do?
I feel like I'm an intermediate with the macros, so I've still got a lot to learn.
Yeah.
And it's really where I find my interest. So I'm in the process now of trying to just perfect as much as I can with macros whilst also having that mechanical system.
Yeah.
Because I feel like with macros you can know a lot, but you also need to have what the guys have been talking about, a mechanical edge where you've got a trading plan and you follow your rules day in, day out. So that is really what I'm trying to do.
It's brilliant. And Joe said it earlier, I do it. I look at its sentiment things, and often you can look at a chart and go, well, it looks like it's going to sell off, but how can it with that data coming out? And all of a sudden, the data backfills what the chart's telling you. And sometimes it's the other way around, which is why I said on stage, have a backup. What will happen if that doesn't happen? And you're ready to, just as everyone's floundering, you can go the other way.
Yeah, thank you.
Brilliant. Thanks very much. Cheers.